So the autumn budget has just been released and Chancellor Jeremy Hunt has presented the changes that will be made in the economy. Now I know most of you have way better things to be doing than actually reading this statement. So in this video, I'm going to go through the key changes which I think that you will most appreciate and as a long-term investor will apply to you. So first of all, let's talk about national living wage. This is something that will affect a lot of people, especially people under 25. However, if you're older than that, you're probably not going to be caring at all. So from the 1st of April 2024, the national living wage will be increased by a huge 9.8%, which is currently higher than the CPI. So the new national living wage will be £11.44 per hour, and the age threshold to get to this will be lowered from 23 all the way down to 21. This is good news, I'm sure, for a lot of people, but let's get into the nitty-gritty and get into the tax cuts. So as you know from last year's autumn statement, when my channel first began, the Conservative government actually tried to do tax cuts back then when inflation was running rampant, and that didn't go well at all. In fact, we actually saw the pound's value drop straight after that announcement. However, this time they've still gone with some tax cuts, although not as big as last year's. So the first way in which you are going to see a tax cut if you are an employee is through the national insurance contributions. So class 1 national insurance contributions are going to be lowered from 12% to 10%. This will start on January the 6th, so employees will quickly see the benefits at the end of January when that tax cut comes into play. Given that the national insurance contributions is lowered, the average worker on around £35,400 will receive an effective tax cut of around £450 during the tax years of 2024 to 2025. The government also plans to cut taxes for self-employed people beginning 6th of April 2024. So the main rate of class 4 national insurance contributions will go down from 9% to 8%. So for an average self-employed person earning around £28,200 per year will see a savings of about £350 in that next tax year. So what you're really here for are the personal tax and savings changes. And let's talk about ISAs. So actually this year there has been quite a few changes within the ISA. So as you know, ISA stands for individual savings accounts. As an investor in the UK, we benefit from a really good ISA scheme, meaning that anything that we have within an ISA is completely tax-free when we withdraw that money. So it is in our best interests to fill up these ISAs, also our pensions too. So from the next tax year, the government is finally introducing the ability to allow multiple ISA subscriptions per year. So up until now, we can only deposit into one stocks and shares ISA any given year. This means that even if we've deposited just £1 into an ISA, that automatically opens the ISA and activates it, meaning that our allowance of £19,999 that we have remaining can only go into that specific ISA. However, starting from the next tax year, you can actually have multiple ISAs, and I'm assuming that our allowance of £20,000 a year will be shared between the different ISA accounts. Now, this is extremely good news for any investor in the UK, as it means that now we get to shop around for our ISA. Brokers for the longest time have benefited from this 1 year per ISA limit, as what they need to do is grab the customers on April and they can make any changes they want, and you can't really change your ISA within that tax year without technically losing out on your allowance. This means that some companies, I'm not going to name any name, have pretty much done the whole rug pull thing where they introduce customers at a very low fee and then gradually start to increase that fee throughout the year, sometimes multiple increases at that. So now if stockbrokers increase their fees and you haven't maxed out your allowance of £20,000, then you are free to just open another ISA and deposit the rest of your limit in that tax year. This also means that you can try out different brokers and you can see which one is best for you without having to completely commit to one, even if you've just deposited £1. I think this change is something that we have been waiting for a very long time. It didn't really make sense that we can only deposit within one stocks and shares ISA, but now we can, and I'm very happy to see that. The government has also now said that they're allowing partial transfers between different providers. So for example, here is my free trade ISA. I've had this ISA for 2 years now and I've maxed out my contributions on it. This isn't my current year's ISA. However, if I wanted to transfer this ISA to a new provider, let's say for example Trading 212, what I'll actually have to do is sell off all my holdings, get them in cash, and because Trading 212 doesn't have an in-specie transfer, I'll have to settle all this in cash, which means selling at a loss for some of these companies here, and then I can close out this ISA and transfer the entire entire ISA. However, now that we are allowed multiple ISAs, what I can do now is whatever is in cash from my free trade account, or in theory anyway, I can settle those and then transfer into my trading 212 account. And then I can just open an ISA on InvestEngine, which I've been wanting to do for a while now. And then I can do another partial transfer from my free trade account into here and essentially get rid of free trade because I no longer want to have an ISA with them. My biggest problem until now was that some of my investments are in the red for my free trade account. For example, this holding, even though it's not in the red too much, only by £300, I don't want to settle anything at a loss. No one has any idea how long it's going to take for this to not be in a loss. So essentially I'm just unhappy with my ISA at this point, and up until now I couldn't really do anything. So partial transfers are a very good idea, and it allows you to transfer some of your funds to another broker without having to transfer the whole ISA. Another thing that the government announced is that they're removing the requirement to reapply to your ISA annually. So up until now, if you had an ISA with Trading 212, for example, you had to reapply the next tax year again, even if you had decided you want the ISA within Trading 212. This was a bit unnecessary, but the government have gone ahead and said that they will be removing this requirement, and you won't have to reapply for an existing dormant ISA for 2024. Another big piece of news which had taken the whole of YouTube by storm, and a lot of news content was focused around the fact that fractional shares could be illegal within a Stocks and Shares ISA, as when the first laws came around Stocks and Shares ISA, fractional shares weren't really a thing. Only until recently providers such as Trading 212 offered fractional shares, and the government didn't confirm whether keeping them within your ISA could actually lead you to paying tax within a Stocks and Shares ISA. The government have said that yes, they're allowing certain fractional shares to be part of your ISA without affecting your tax status. This means that for a majority of people, having fractional shares in your ISA like you've had previously should be fine. That ends all the rumors and the news that have been sensationalized about, potentially paying for stocks that you've had within your Stocks and Shares ISA. This is welcome news, and I didn't really ever think that this would have been a thing, hence why I've never made a video saying that, Jeremy Hunt wants your fractional shares money. In either case, it probably wouldn't have been a big deal anyway, because realistically you'll probably only be paying tax on the fraction anyway. Fortunately, you're not going to be paying tax on having fractional shares as long as the ISA provider allows you to invest in it in the first place. Another thing the government have said is that they are planning to digitalize the whole ISA reporting system. Even though they were very vague about this in the autumn statement, I think personally that this means that all these different companies, all these different stockbrokers will be putting all the information in a central database, meaning that if you've deposited £5,000 in Trading 212, £5,000 in InvestEngine, for example, the government will know that you have spent £10,000 of your allowance, and that £10,000 of your allowance is left. So if you wanted to open an account with Vanguard, for example, they would know that you have £10,000 of your remaining allowance left. I'm guessing because of this digitalization, it is now possible to have more than one ISA provider at any given tax year, because before, from a HMRC standpoint, it would have been very difficult to keep tabs on everyone having their different allowances shared between different providers. But now with the digitalization of this and having some sort of central database, it will allow partial transfers of ISAs and also allowing multiple ISAs per tax year. So the other rumor that was going around is that the individual savings account allowance of £20,000 could be increased to maybe £25,000. The last £5,000 allowance may be given to just investing in UK companies only. So I can confirm that there has been a freeze on all these allowances. This includes the £20,000 ISA allowance, still at £20,000. The junior ISA allowance stays at £9,000 too. The lifetime ISA also stays at £4,000 of allowance, and the child trust fund allowance, which I wasn't actually aware of, stays at £9,000 per year. Also, for the two of you that might be aware of innovative finance ISAs, they're just a type of ISA that you can invest into a bit more speculative and more higher risk, not really recommended by the government investments. You can now invest in open-ended property funds and other long-term asset funds that I'm not going to be covering in this video. But make sure to check out some of my other videos, and I'll see you in the next video.